Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a 1-year daily candle chart of the CBOE Volatility Index, ticker symbol VIX, which is a leading indicator. And if you've been following along with the market guys reports, you'll know that the VIX is inversely related to the S&P 500. And last week I said that the VIX would most likely drop, which it did, to test support. Now, this horizontal line right there, as I zoom in, you'll see that horizontal line was the support level. We broke down below that support. We see right here on Tuesday, we had a bearish engulfing pattern, and the VIX dropped a little bit more than what we expected. But the good news is the volatility index has found a new level of support right down here, which is from the lows back in April. So this candle that we see here closing on the 5th of July is more or less a spinning top. You can see that we have a higher high but a lower low. This is a half signal. But the fact that it's a spinning top tells us that the VIX will most likely rally next week. So that's going to be my forecast. Now remember, the VIX is inversely related to the S&P. So if we see a rally in the VIX, we will most likely see a drop in the S&P. So let's go to the S&P, which is the ETF SPY. You'll see that my forecast lines are still in place. I said that the markets would most likely rally to resistance and test that resistance from the high back here on June 20th. We see a lower low here as well, so that's more like a pivot point to the downside. So I'm going to erase this line right here for the S&P, and I'm going to forecast that we're most likely going to drop to test the 20-period moving average. So we have a small gap below the market, which will most likely act as a price magnet to draw the price downward. And that's what my forecast is for the SPY. I think we will pull back to fill that gap, and then we'll have to see whether or not we bounce from that point. Now, if we look at the diamonds, which is the Dow Jones Industrial Average, ticker symbol DIA, you'll see that my lines again are in place. And I said that last week we would most likely move up to test resistance earlier in the week, which we did. And then I said we would pull back. So we're starting to pull back here again, a full pivot point on the diamonds. If you look, we'll see today the close on July 5th. We have a lower high and a lower low. So I think that next week we'll most likely pull back to that 20-period moving average. If we look at a more broad-based index in the Russell 2000, you'll see here in ticker symbol RUT, I said we would move up to test resistance. We did that early on in the week. Monday, Tuesday, Wednesday, we had a half day. Thursday, we would close here. Friday, we have more or less a hammer pattern. But look down here, you'll see the CCI is crossing below the positive 100 on that scale. So that's a sell signal on the CCI, and I find that the CCI is more sensitive to the stochastics. You can see the stochastics is almost overbought, but the CCI is crossing down below, which is a sell signal. There is a very minor gap right here, which I will draw as a gap fill support level. So I think that overall the markets could pull back to test that support level. And then we'll have to see whether or not we bounce at that particular point. So we'll have to be in more or less a wait and see mode to see whether or not that support level holds. Now for the Qs, QQQ, that's the NASDAQ market. And you can see that, again, the story is repeating. I said that we would most likely move up to test resistance from the highs back here in June. We moved right up to the resistance point, and again today on July 5th we have a lower high, lower low, and that is signaling a pivot point. So next week I think the Qs could very easily pull back to the 20-period moving average, which would bring us to 186.23, And again, I'll erase this line right here because that's the former resistance. We are now at that point, and I think that we'll have to see again whether or not this support level holds as a gap fill support level. That's it for now. I hope you had a great 4th of July holiday. And for our Canadian members, I hope you had a happy Canada Day, which was on Monday. I will be reporting each and every week on Friday as we put out the weekly market report. So hopefully you'll stay tuned to the Market Guys reports. And I hope you see value in this because we are consistently putting out these reports and we're very accurate. I hope you can see that. I leave my lines on the chart for a very good reason so that you can see the performance. You'll look back here. All of these lines back here were previous forecasts, and you can see how well the market has performed, and you can see how accurate our forecasts have been. So stay tuned to the Market Guys, and we'll talk to you next week. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.